Welcome to the Bloomberg Daybreak Asia podcast. I'm Doug Krisner, and today we'll take a deep dive into the reported merger talks between Nissan and Honda. We'll be hearing from Nissan's former chairman, Carlos Ghosn. But first, we want to take a look at the market landscape on this holiday-shortened trading week. Joining me now is Adam Coons. He is the Chief Investment Officer at Winthrop Capital Management, joining from Indianapolis. Adam, it's always a pleasure. I guess the big story last week was the change of heart on the part of the Fed. Looks as though they're only penciling in 2 rate cuts for the new year as opposed to their prior forecast of 4. Did that come as a big surprise to you?
For us, it did not. We've been in the camp kind of with on the lower end of cuts pretty much all year long. And it's really coming on the heels of the economic data just isn't pointing to a reason for the Fed to move towards stimulus. When you're looking at kind of that monetary stimulus idea, there's still enough fiscal stimulus to keep the economy going. And that's representing the fact that, inflation still is maintaining above that 2% target. So that's obviously playing into it. And the labor market, while has weakened throughout the summer, by no means is it weak. So I think when you look at the U.S. economy, it's still relatively strong. And so that just doesn't really create the narrative that the Fed would need to have an aggressive easing cycle. So until that happens, I think it's going to be a hard case for them to cut more than 2 or 3 times next year.
It's been a very unusual situation for the bond market. The Fed adopts a path of less aggressive easing, I think, back in September, right? So we have, in that period of time, 75 basis points in a higher yield for the 10-year. That seems a little counterintuitive. How are you playing the bond market these days?
Well, this whole last year was quite a volatile year for bonds. And really came on, like I said, that idea that, if you think back to kind of this time last year, the beginning of 2024, the expectation of rate cuts was quite significant. I mean, at one point, the markets were pricing in 7 cuts, maybe 8. And obviously we didn't get that. So the bond market has continually tried to front run the Fed's decision and continually gotten it wrong. And so I think that's why we've seen such a whipsaw in interest rates, particularly on the long end, because, as the Fed, I guess it really comes down to as the data has proven that the economy is stronger than expected, that obviously kind of lifts inflation, lifts growth. And so you would naturally see real interest rates be higher. And so I think that's kind of what's playing through. At the end of the day, though, we still really like bonds right now, even though there's a little bit of a heightened volatility. We do see this as a point in time. We don't know how long it's going to last, but I continue to use the phrase, this is the most asymmetric, risk to reward investment you can kind of have right now, where the risk of rates going much higher is fairly low. And so your other 2 scenarios are that rates kind of stay in this choppy frontier that it's in between, 4.5. And I'm happy to clip that coupon. And then if we do see rates come down and I get that price appreciation of bonds, that's the other scenario. So 2 out of 3 scenarios, I feel really confident in that that's a good strategy as an anchor for a portfolio. And like I said, that the probability of interest rates going much higher from here and that deteriorating my bond position is fairly low right now. So that is why it's one of our highest conviction trades.
So Adam, I'm wondering whether there's some sort of risk about the economic policies that we're going to be getting from the Trump administration will prove to be inflationary, and whether that's a concern. Last week, Fed Chair Powell seemed to suggest some on the Fed maybe are a little concerned about that. Although last week we heard from the head of the San Francisco Fed, Mary Daly, and she told us, no, the data will determine Fed policy. But for the sake of argument, let's assume inflation does prove more stubborn and the Fed adopts a strategy of keeping rates on hold for a while. If that becomes kind of a persistent notion, is there the risk then that the next move on the part of the Fed becomes a rate hike?
Well, I think a hike is a very low probability, but a continued pause, I think, is a growing possibility. And I think you hit the nail on the head here, is that the Fed, and I think investors in general, should kind of move slowly right now because while we do know what a Trump presidency looks like, we've been here before. There are some unknowns right now, and kind of how those policy changes will affect the economy and then therefore the market. And so, yes, I think it does make sense that the Fed would ease back, slow down, and because the last thing it's actually more detrimental if they were to cut aggressively, and then because policy leads to inflation, then have to change their policy and uh, increase interest rates suddenly. So I think the idea of kind of pausing, moving slowly, assessing what kind of inflationary pressures the fiscal side has on the economy is a smart move, and I think that is kind of the unknown. I don't think it's going to be a story where we're going to see significant inflation. I think that there are a lot of offsets when we talk about tariffs, and to say that that's necessarily going to just be outright inflationary. At the end of the day, consumers have to make choices, and consumers, they are somewhat tapped out when you look at credit card usage and other metrics. If we did see higher prices because of tariffs, I don't think that means that they're necessarily going to keep spending at that higher rate. I think you're probably going to see is that's going to lead to the economy starting to roll over, where consumers then have to start making decisions to not spend. And so that might be the real effect of tariffs rather than inflation. But all of that's, it's too soon to tell. And really, we don't even know what the policies are going to be. We're speculating on all of it. So that's when it makes sense to just move slow.
Fair point. Although we do know a little bit, maybe there is less in the way of regulation. Maybe there are lower taxes, and maybe tariffs come to be. I don't know whether that's a negotiating strategy or not. We'll have to wait and see. To your point, there's a lot that we don't know. One of the things that we do know is that 2024 has been a phenomenal year for megacap tech. I think the NASDAQ 100 is up more than 26% so far this year. We don't have that many days left in 2024 insofar as trading is concerned. If you kind of look into the crystal ball for 2025, will tech still be kind of a predominant category?
I do. And my crystal ball, I'm speculating. I think that tech will continue to do fairly well in the first half of 2025. I think the momentum carries them through. The narrative around AI, we're still seeing, some positivity with breakthroughs there. I think that momentum continues. What worries me is the back half of 25 and not trying to time that in any way. So I am moving more defensively in the space, but I do think it will, at least like I said, in the front half of the year. I think we continue this momentum. I don't see anything getting in its way in the near term. It's really the kind of beyond that scope that I can see that gives me a little bit of worry and pause.
How are you viewing markets outside the U.S. right now? Are there opportunities offshore?
To be honest with you, it is one of the most difficult times for me to invest outside of the U.S. And it's not because I don't want to. I like the India China story. I think that there are opportunities to be had there at some point. But for me, one of the biggest things that I watch is the dollar index. The Dixie is my main metric there, and 100 on that index is kind of my line in the sand. And the dollar has remained really strong. I think we're at 106, 107 on that index right now. And as long as it remains above 100, it just makes it difficult for me to want to invest abroad because of all the reasons that come from that strong dollar to weigh down the repayment of debt and whatnot. It makes it difficult. So I think until I start to see the dollar weaken a little bit against some of those currencies, which I think that's going to be a difficult thing to do in itself, and then obviously we have these tariffs to worry about. I think I've just kind of got to stay on the sidelines and wait until the right opportunity. I'm okay being late to that party rather than just jumping in and then feeling a lot of pain.
So if you're fairly positive on the first 6 months or so of 2025, what might precipitate a little bit of corrective behavior? If the equity market does remain fairly strong, is there something that you see on the horizon that could create some weakness?
Well, I think it comes down to the consumer, and that's been what's helped the markets, the economy stay, very resilient here in the U.S. Is that the consumer's ability to spend has continued to be strong, and I think a lot of that is what I just mentioned. Is we've obviously seen some level of inflation on the wage side as well. That's sticky. and then those goods that we have been buying, abroad at a cheaper, it's even cheaper when the US dollar is strong, right? So I think that's what's been the untold story of why the consumers remained quite resilient. And so I think the flip side of that is if tariffs do start to clamp down on, okay, US consumers, just it is more expensive to purchase, and so therefore they just don't, that would obviously slow the economy. And I think if we start to see that, I think we are kind of a little bit of a tinderbox right now where it wouldn't take much to break it. And so that's my worry, is if the consumer that's that kind of final straw, and we start to see employment deteriorate further, that's what would be the catalyst for markets and volatility to go awry in the back half of 25.
Adam, we'll leave it there. It's always a pleasure. Wishing you the best for the holidays. Adam Coons is the Chief Investment Officer at Winthrop Capital Management, joining from Indianapolis here on the Bloomberg Daybreak Asia podcast. Welcome back to the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. Nissan and Honda are working on a merger that would create a rival to Toyota in Japan. The Japanese broadcaster NHK reports the automakers are aiming to reach a final agreement in June. However, the former chairman of Nissan is calling it a desperate move. Carlos Ghosn says it reflects the panic mode at Nissan. Ghosn was the architect of the Renault-Nissan alliance some 25 years ago, and he is currently suing Nissan for $1 billion in a defamation suit following his arrest in Japan in November 2018 on charges of financial misconduct, which he denies. After his arrest in Japan, Ghosn escaped to Lebanon, and here he is speaking exclusively with Bloomberg's Manis Krani from Beirut.
Nissan, Honda, Nissan going after Honda. Is this a pragmatic deal, Carlos, or a desperate roll of the dice?
No, in my opinion, it's a desperate move. It's not a pragmatic deal because, frankly, the synergies between the two companies are difficult to find. There is practically no complementarity between the two companies. They are on the same markets. They have the same products. The brands are very, very similar. So in a certain way, from one side, Nissan, it's a desperate move to try to find the future. And from the other side, Honda, which, if I understand well, they were not very excited about this move. But, you have to count with Métis in Japan. That means the Métis had a big say into it. So at the end of the day, they're trying to figure out something that could marry the short-term problems of Nissan and the long-term vision of Honda.
Do you think Nissan is being put? Do you think Honda is being pushed into this deal by the economy ministry? There's politics pushing this deal, Carlos, rather than the value of the deal.
Without any doubt, for me, that means having lived in Japan for so many years, I understand how influential can the Métis be, and I can tell you that from all the data that I received about the performance of Nissan, which has been miserable for the last, at least for the last 2 to 3 years. They have cash problem. They have investment problems. They're being really hammered in the United States. They got practically out of Europe. They're being challenged in China, and there is no plan in front of it. So I can tell you that there is panic mode inside Nissan.
Well, if they're in panic mode, it then pushes the idea that the economy ministry, as you say, are in a do whatever it takes moment for Nissan.
Yeah, well, there is, in my opinion, there is no industrial logic to it. But as you know, there is a moment where you have to choose between performance and control. Obviously, if you can have both, it's the better. But there are moments where you have to choose. And without any doubt, with the Métis and everything I know from it, they prefer control on performance. So they pushed Honda into the deal without any doubt.
Well, with that in mind then, Carlos, what kind of backstops? I mean, you've dealt with the Japanese, you've dealt with Nissan, you understand the metrics to get these organizations together. Is the government going to have to deliver backstops to Honda to make this deal work?
No, I think they in a certain way tried to push Honda onto this deal. Obviously, Honda must have some kind of benefit out of it. If not on the short term, at least on the mid and the long term. But that will be closely monitored to make sure that the impact on the Japanese society is not going to be too big. Because, when you have two companies of this size and practically in the same market with practically the same strengths and the same weaknesses, there are going to be a lot of costs to be taken out, and there are going to be a lot of duplication to be taken out. So this is going to be closely monitored by the METI.
You doubt that the synergies are there, though?
Well, I can tell you that it's on the short term, I don't see too much synergy. Obviously, you go to the classical one, which is purchasing together to try to leverage a better scale. But this is something that Nissan has done with Renault successfully in the past, except that at this moment, it's really concentrated in Japan. It's three Japanese companies which have very similar products. The image of the brand are not very different from one to the other. I'm including Mitsubishi into it. So it's going to be very tough. But on the long term, they can save on future investment by doing the investment one time in technology, doing it one time and sharing it with three companies.
Let's just press a little bit more on this. It's going to be tough, as you say, to get the synergies. It's driven by the Ministry of Economy. So there's a political dynamic to this. Is this Japan creating, putting two companies together to really try and stand up to the competition from China? Is that part of the narrative here, Carlos?
Without any doubt. It makes a lot of logic today. The Chinese automaker are on the winning side. They became, as you know, the largest exporter of cars. They are the largest maker of EV. They are being successful in a lot of new technology. They're doing fine cars. So in a certain way, yes, it's a defensive mood. It's a defensive mode that's going to be trying to shore up the Japanese industry and avoiding a cataclysm, first a social cataclysm in Japan, and particularly to try to reinforce these companies on the foreign markets.
Foxconn have put on pause their interest in participating in this deal, Carlos. They had a meeting with Renault. It obviously didn't go according to what they wanted. Is there only a Japan solution for this? Is there only a Japanese savior for Nissan, in your view?
I don't see him for the moment. Obviously, in the team existing today at Nissan, usually you can measure the team by the results they get. That's the only way you know if somebody is capable of doing something. Frankly, when you look at the last 5 years, the results are not a good testimony of the strengths of the team. Will they be a savior? I don't know. I know how tough it's going to be because you need to understand that Honda is an engineering organization. It's very strong in engineering. And Nissan is very proud of its own engineering. So the battles here to try to decide what technology is going to be adopted by the new company or by, if it's a merger, or by the new alliance, I can tell you it's going to be very tough. I've been dealing with this for many years. I remember when we took control of Mitsubishi, Mitsubishi was not afraid of the collaboration with Renault. They were afraid of the collaboration of Nissan because they know how tough it's going to be when engineers meet together. And there is this pride of my solution is the best solution, which always is an obstacle to develop serious synergy for the future.
Well, of course, you're going to have cultural issues when it comes, even if they're two Japanese firms. I think the point I was trying to get to, Carlos, was do you see the only solution being a Japanese to Japanese merger or joint venture? Do you see any possibility of an overseas company like Foxconn being allowed into this house?
Well, the approach of Foxconn, when I heard about it, was very interesting because it is something innovative. It is something that would have put Nissan in a completely different path. But the fact that you're telling me now that they are posing on it, they are very realistic people. They know they cannot do it against the will of the government of Japan and particularly of the METI. And now you need to know also that in Renault, the French state has a big say because they are a very influential shareholder in Renault. And I'm sure that the decision of pause is coming from the fact that they know the METI is not very favorable, and probably the French government doesn't want to upset the Japanese. I've been witness of how much the French government is bending backward to please the Japanese in the past, unfortunately.
Well, look, I know that there's ongoing issues between yourself, the Japanese, and the French, etc. But you have a ringside seat at many of those meetings. Is this, briefly before we talk about the global auto industry, Carlos, is this Renault's moment to exit? Do you think that that's what they hope for, or do you think they really do want an equity participation?
Oh, no. I mean, this alliance has been, since 2020. It's not a surprise. I told you that the alliance is a zombie. It's an appearance of an alliance. There is an appearance of a collaboration, but there was practically no collaboration at all. I think what Renault, after having the benediction, the blessing of the French government, is trying to maximize its asset inside Nissan. They're trying to get the most money out of their share. But that will, in my opinion, that will sell to Honda without any doubt.
Carlos, let's just broaden the conversation a little bit. You've lived and breathed this industry. You've seen the evolution of the Chinese electric vehicle market, the strength of the auto industry in China become. Are you surprised about how strong they've become so quickly?
No, not at all. Frankly, I've seen the signs of it. When we entered China, when I was heading Nissan and we entered China in 2003 and we started building our plants and organizing the engineering, in a very short period of time, I would say 7 or 8 years after we built the plants in China, the Chinese plants were at the top of the ranking from all our plants. I mean, we were comparing the productivity, the quality, the time to market of the Chinese plant compared to the Japanese plant or to the US plants or the European plants. And the Chinese came to number one. It's a very disciplined workforce. They are very, very eager to compete into this industry. So I think this industry in the next 20 years is going to have to deal with the Chinese talent and the Chinese know-how.
Well, Carlos, you were known as Davos man, I think. You were the voice of free trade every January. The world is bracing for a next round of trade disruption from Donald Trump. Every CEO of an auto company out there probably has their own personal thoughts, but they probably can't really express them. You can. You're free now. As the auto CEOs line up, what can they not say? What do you think they're thinking, but they can't say?
Look, if you... that means this is an industry which is, by definition, a global industry. You can't survive as an automaker if you are restricted from accessing any market in the world. Size matters. Investments are huge. Economy of scale are extremely important. So this industry is living on globalism and globalization. So I think it's very bad news for all the automakers to know that there are going to be tariffs and there are going to be obstacles for them to be present in all the market. This will translate into a lot of them having problems and certainly a higher price for car in all the markets.
And that was Carlos Ghosn, former chairman of both Nissan and Mitsubishi Motors, speaking exclusively with Bloomberg's Manus Cranny. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.